Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday the 19th of March 2020, and yesterday we published a video entitled Gold and Silver Markets Update, which was produced at 14:30 GMT, and gold at the time had fallen to $1,490 and silver had also fallen to $12.40, producing a gold to silver ratio of 120 to 1. This video podcast is in fact being produced very early. The time is currently 7:30 AM GMT, so it's before equity markets in the United Kingdom open, but at present gold is down slightly in dollar terms at $14.89 and silver is down quite a bit more percentage-wise at $12 exactly, producing a gold to silver ratio currently of 124 to 1. Now later today, we will produce a more comprehensive catch-up on what has happened and is happening in the markets, especially when one bears in mind that the Dow Jones closed down another 1,338 points, taking it below the psychologically important level of 20,000. But in this video podcast, we're going to concentrate more on what actions the ECB has taken overnight and the unfaltering rise of the US dollar. Yesterday evening, the European Central Bank, now headed by the former chief of the International Monetary Fund, Christine Lagarde, held an unscheduled meeting from which an additional 750 billion euros, the equivalent of $820 billion, bond buying program was launched. The purpose, of course, was to help maintain market stability and also protect a declining euro economy, a blueprint which most central banks are now following. ECB President Christine Lagarde made her intentions most clear by her own words, quote, "There are no limits to our commitment to the euro. Extraordinary times require extraordinary action," unquote. Market reaction was mixed, and the euro fluctuated during Asia trading, and just over an hour ago, the euro remained little changed to the US dollar, with $1.09 to the euro. Now this action was taken in addition to extra liquidity already having been pumped into the financial system last week. And according to Bloomberg this morning, yesterday's announcement includes the following undertakings. 1. Buying public and private sector securities until at least the end of 2020. 2. The program will cover all assets eligible under current quantitative easing programs and will be extended to commercial papers of sufficient credit quality. 3. Greek government debt will be included. 4. Collateral standards will be eased. It's quite important. 5. The program will continue at least until the end of the year. And 6. The ECB will consider raising its self-imposed limits on QE holdings and will increase the size of its programs if needed. What is notable is that previously the European Central Bank did not entangle itself with the acquisition of commercial paper, something which the Fed has done for some time. We're now faced with a situation where central banks are basically turning on the monetary policy tap and really attempting to print its way out of this economic crisis. In addition, governments are advised to adopt the necessary fiscal measures to assist with this, accepting the fact that monetary policy alone cannot cure the recession or solve it. A recession which is either looming or already upon us. There is most certainly a liquidity issue, and even those banks which previously passed the so-called stress tests that were introduced since the 2008-9 crisis are now accepting funds being made available by the US Federal Reserve yesterday. This alone, just yesterday, totaled $130 billion. The main beneficiary of what was declared yesterday by the European Central Bank undoubtedly will be European bonds, with German Bund futures rising as much as 122 ticks in Asia trading, and these gains are expected to increase once cash trading begins this morning. The desire and intention is that German and French bond yields will flatten, and Italy and Greece should also benefit, particularly now that Greece is able to make ECB purchases for the first time since the creation of the Security Markets Programme. You see, it's important for us to remember that the European Central Bank has already embarked on a €20 billion per month asset purchase programme, and just 7 days ago, the 12th of March, it had undertaken to spend an additional €120 billion until the end of the year. So what was announced yesterday is in addition to all of that. This level of financial support is unprecedented, and more is still to come. For those who believe in Austrian economics or monetarism, will see all of this as sheer folly, ultimately doomed to end in failure. Those, however, who believe in MMT or modern monetary theory will view this as evidence that their theory works. However this does eventually pan out, the side effect currently of all of these central banks' actions and market responses is a surging dollar, with a dollar spot index as we write of 101.37. Various currencies have tumbled against the dollar, including the Australian, New Zealand and South Korean currencies, and sterling fell to its lowest level for 35 years. We are beginning to enter the realm which we on this channel predicted from the very start, the inexorable rise of the US dollar while other currencies tumble. For years you were told by others that the US dollar would fall and fall hard, leaving Americans in a state of abject poverty and disillusionment. We have fought against the tide, and it's not been easy, resulting in our following and support on this channel being adversely affected. Very few people want to hear information that they don't like. We are now witnessing with our own eyes and ears that the rush for dollars is gaining apace, despite every attempt by the Federal Reserve and its peers to provide liquidity through swaps, repurchase operations, and emergency rate cuts. You see, the Australian dollar, already previously under pressure, fell to its lowest level again against the US dollar, the lowest level since 2002. And the Indonesian rupiah sank to its lowest level since 1998. The dollar is gaining against every major developed and emerging market currencies. Even the yen, normally as a safe haven, has dropped 1% against it. Oriana Lisa, a sales trader at CMC Markets PLC in Singapore, summed it up remarkably well this morning. Quote, "No asset class is safe right now from being sold to get your hands on dollars. Normal market mechanics have disintegrated. I don't see any stop to this for some time yet, with liquidity crunch worries in markets. It's a case of sell everything you can to get the mighty dollar. It's the ultimate haven." Now, the effect from this dollar strength is that gold prices are remaining subdued in dollar terms, whilst they're rising in most other countries' currencies. It is expected that this market dominance will continue for a little while yet, but naturally it won't go on indefinitely. Once the US dollar begins to rein back, then we shall see the dollar price of gold and silver begin to rise, and in gold's case we suspect quite dramatically. The final point we wish to add here is that we are entering unprecedented and uncharted waters, and all those who thought that a 90-to-1 gold to silver ratio would result in an immediate reversal back to traditional norms were wrong, and more than likely will continue to be wrong for a little while yet. The relationship between gold and silver will eventually change, but no one really knows at present whether that will happen when there's a gold to silver ratio of 125, 130, 140, or even 150 to 1, or when the dollar index reaches 105 or 110, or even, God forbid, 115, though we doubt that will happen. We have our own thoughts on this matter, and we'll share them in another podcast once we've conducted our own financials. But meanwhile, all this being said, right now, as we stand today, on Thursday the 19th of March 2020, the United States dollar is currently king. And that is not necessarily beneficial to the United States economy. Thank you so much for listening. If you haven't already done so, please subscribe to our channel. Plus, not forgetting the Richard and Greg channel, of which we uploaded a podcast last night. Remembering, please, to press the bell sign so that you're notified of our videos as and when they are published. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.